go?
Yes.
Okay, thank you. My name is Eugenia. I sit in an audit committee of Buffalo City Municipality.
Sorry, we can't hear you.
My name is Eugenia. I sit in an audit committee of Buffalo City Municipality. I'll probably have a question for the last speaker and more for the second speaker. I hear you saying you need maybe diversity in the audit committee, whether it's because accountants, everything accounting myself, it's more about numbers. If you link with what the first speaker said about integrated reporting, predetermined objectives, don't you think audit committee members need to have a different lens beyond the numbers? Or maybe diversity that brings, synergy to be able to come with something integrated in their reporting and playing their fiduciary duties. My comments to the first speaker is I'll probably will be happy to report that in that audit committee, we engage with the executive authority, the mayoral committee, the MPAC, and one political principal reported it's been around for 10 years. It was the first time. So meaning then it kind of, we'll see the results, it's just new. Because we're a new audit committee, just haven't finished 1 year anyway. I want to ask how much, is there a formula to charge entities having experience in bigger ones and smaller ones by the AG? Is there any specific formula? That's one. The second one, seeing that there's a lot of brain drain from the public sector to the private sector, will AG or Treasury or whatever propose a premium to attract back the top accountants or the top talent? The last one, seeing that there are issues of institutional capacity, do you think audit committees are remunerated fairly if they even had to go beyond what they're supposed to do? Thank you.
Thank you. I'm going to allow per person one question. Unfortunately, we don't have a lot of time, and I'm going to ask you to please keep it short. I promise you we'll understand you if we keep it short. You don't have to give us a lot of background. We will understand you. I think there was another hand here, yes, yeah.
Thank you. My name is Jim from Makomante Investment Holding. My question is to the Auditor General. I just wanted to find out where do you draw the line between adjustable and non-adjustable audit finding? And the reason why I'm asking this question is I've came across to many instances where the Office of the Auditor General will allow a client to adjust, and in some instances will not allow another client to adjust. And to Professor, as much as we ask, what did the audit committee miss? I think we must also extend this question to the external audit. And the reason why I'm also saying this is I've seen the trend of the restatement and restructuring of the financial statement, especially the opening balances. And we ask ourselves, and also increase the risk of us, the audit committee, that since the auditors have certified this financial statement in the prior year, what did they miss such that in this year, the management have the opportunity to restate what we thought last year was 100% correct? Thank you.
Thank you. Can I start with the Deputy Auditor General?
Thank you very much, Program Director, and thanks for the questions. The very first one in relation to engagement with the Executive Authority, on my side, I really would like to encourage you to continue with what you've started. We think it's in the right direction. As far as the formula for setting audit fees, this is a difficult matter currently that we are dealing with in the office, and it arises from, if you look in detail at the issues that we are coming up with in our reports, there's quite a lot of work that traditionally, when the fee is set, ought to be done by management. But we end up spending an inordinate amount of time trying to back and forth assist, do all sorts of things. So what you see in most of those audit fees, for example, there's a huge element of what was done, among others, by our teams that naturally ought not to have been done by them. Not necessarily preparing the accounts, but providing insights to management, because there's an issue with people understanding some of the findings of the auditors. So there's a lot of inefficiency that goes there. It goes with preparation, it goes with quality of information, it goes with having to send information back for them to redo. So while they are doing that, the auditors are still sitting around, lying idle and all of that. So especially in municipalities, when we analyze it, it's true that when you compare one municipality to another, it always comes up with challenges in terms of understanding the difference, but it's got to do with efficiencies and the ability of the institutions to act and to deal with the issues that relate to the preparation of financial statements for financial audit. And then the last one regarding the adjustable and non-adjustable audit items, I'm not too sure if it's an issue of timing, but I would venture to say that in respect of the Public Finance Management Act, the financial year end is 31 March, as we know, and all departments and entities are given 60 days up to the end of May to prepare for the audit, and then they hand over the files from, let's say, 1 June, on which the audit must be done and reported on by the end of July. So there's that timeline that is part of the audit. So you will find in some instances that the auditors will say, no, we're not adjusting because the deadline that we gave you in respect of the dates that you need to be observing passed 2 weeks or 3 weeks ago, as an example. However, if there's a major item that has been picked up in the audit, I'm not aware of an instance where an auditor will stand back and say, because of the nature of this item, I'm not adjusting, because those financial statements belong to management. So if management, during the process of them being attested, finds that there is an issue or more, or the auditors pick up issues that need to be reflected appropriately in the books, management is allowed to adjust. So there's two aspects to your question, I guess. The one is about the nature and extent of the issue, where we've got no problem with, but where the timing is going to compromise us in meeting our reporting deadline by 31 July, sometimes we box out and we get to the ring and we see who's going to be in the canvas.
Thank you very much. I hand over to you, Prof.
Can I just deal with the issue of diversity on audit committees? I agree with you 100%. Having all accountants on an audit committee, for me, is a no-no. I agree with you 100% because sometimes when you're looking to see whether something acts like a duck, a non-accountant could well see something totally different from a different point of view. And I agree that you should have a diversified set of skills on that audit committee, not limited to accountants or the usual professions law. Sometimes engineers make good mathematicians, and accounting is maths as well. So when it comes to these complex issues, engineers, architects, I don't know, psychologists even, may see it differently, and I think they would bring a very good diversified portfolio to the audit committee. I agree with you 100% on that. Have we dealt with the issue surrounding adjustments?
Do
No.
you want to take it,
Have I
Prof?
got to deal with that?
Yeah.
Are you saying that if when you find something post signing of audit report, management should be allowed to adjust?
I'm saying the question of what is the audit committee made in the prior year must also be extended to the external audit.
So I'm not following. I didn't hear.
My question was related to the restatement of the opening balances. And my question was, what did the external audit miss in prior years such that the management are allowed to correct the opening balances this year?
Okay, sure. That's a loaded question. The question is, you're saying, what did the auditors miss? The question I'll put back to you is, what made you think the auditors missed something? Because at the end of the day, management would be fully entitled to, it's their financial statements, they would be fully entitled to adjust, subject to audit. So it doesn't necessarily mean that if management come up with errors that happened in the prior years and they need to restate opening balances, that means that those errors actually exist. I'm just talking from experience. That sometimes that management will say they found errors in the previous years and they need to restate the opening balances. But obviously, those balances are then subject to audit. And if management do not provide sufficient and appropriate evidence to suggest that their errors have been made, well then no one will be, management are fully entitled to put those journal entries through, but then the auditors would qualify the financial statements on opening balances, which is normally, if material, is a disclaimer of opinion. But I hear you, it's always the issue, if management find errors, the question arises in everybody's mind is, what did the auditors miss? Well, I would like to, in Justice Middleton's own words, is let's first find out what the directors missed, and then find out why the auditors missed it. Because at the end of the day, it's the directors who are responsible for those set of financial statements. And Justice Middleton, in his Centro case, said the following: I do realize that the auditor might have missed something, but you know what? I'll deal with the directors first, and then I will come after the auditors, because it's the directors who started it. They created it, the auditors maybe just missed it. And so that's the order of events. First, you should ask yourself, the question is whether the audit committee missed anything. Well, depending, the audit committee cannot be held responsible for a set of financial statements. It's not their job to approve the financial statements. It is the board's job. The board as a whole cannot delegate that responsibility. All the audit committee can do is to look at the numbers, look at the stories, and advise the board as such. And the board must take responsibility for those numbers. And I think we missed that in the bigger picture. And we talked about the bigger picture today, that it's the board that are responsible at the end of the day for those numbers. And obviously the board are allowed to rely on management, but it's up to the board then to recruit management that are capable.
Okay. Thank you, Prof. I do realize that it is really the end of the day. I'm going to allow one question again, if it can be short and sweet. The gentleman over there. We can hear you.
With regard to the relationship between external auditors and internal auditors, there is a problem, in the public sector, because the external auditors is the office of the Auditor General, which is mandated.
Contradictions say that it is insufficiently exact. It's insufficiently exact, and if people were in a fight, that would be interpreted to mean it is untrue. But I think there's no fight here, because the journey that we have embarked upon as an audit office is one that says, let's go behind these numbers. And what sits behind these numbers is all sorts of people that make sure that what is reported is accurate. Among those people are internal auditors. So if there are areas of exception to that understanding in terms of how our people in the field do what they are expected to do, I'm sure it's something that we can engage. But I think in general, in terms of the orientation, the approach, what we try to achieve and what we do every day, and what is evidenced by the staff that we communicate to various stakeholders, it certainly is something that would be an exception rather than the rule, if anything of that sort is happening in your environment. But we can happily deal with the specific matter pertaining to that. But I just say that in response to the issue, it's not something that we are easily associated with, that we do not encourage internal audit engagement.
Can I close it for now and say, if you have further discussion, maybe catch him as he walks out. And just take this opportunity to really thank our speakers. I thought those were some great talks, and if we can give them a round of applause, please.